What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day. Tuesday, April 16th. All right, guys, Nvidia stock here today, Monday, down $21.85 a share. That's minus 2.48%. It is fading, at least as of early after hours. That's likely to change by the time that you've seen this video, meaning the price is likely to be different, obviously. Either way, whether we trade sideways, down, or up from here compared to the closing price, take it with a grain of salt. Guys, volume in the after hours is so incredibly low. It's easy to bully stocks in the after hours. It's also easy to pump stocks in the after hours, so take that with a grain of salt. But let's dive in here today and pull out all of the bias that the market gave us in hidden form today. And let's do that starting with quickly analyzing the volume profile here on the 5-minute chart, which we do every day. It's very helpful. Listen, guys, if you don't know by now, Nvidia is a daily upload here on the Roensch Capital Charts channel. So if you haven't done so already, please subscribe to the channel. Helps out tremendously. Now let's take a look. The moves that I'm primarily interested in pulling information out of today is that quick fade and pop over 9 that we got off the open. And then I'm not going to circle the rest of the moves, but we're going to look at the remainder of the day as we got a pretty steady fade downside and just see if anything stands out in the profile. So we look here, we get a higher volume bar on the open. That is very contextual, right? And then we usually expect that quick fade to occur. However, we held volume pretty well into the day. We got a few pops, right, met with, fade candles in terms of volume in between, gets broken up a little bit. But we held volume on the bullish move further into the day than is typical on really any blue chip stock, but Nvidia in particular. And then once that move began to kind of fade backside in terms of price, we popped above 9. As soon as that reversed, if you look down, the volume very quickly faded into what is contextual for that time of day after holding higher volume a little deeper into the day due to that upside bullish move. Today that signals, or to me more so, that does signal some bullish bias on that move because it held the higher volume, even if it was a little choppy in terms of like fade volume pop. We held it deeper into the day than what is normal. Now, if we continue to look here, there is a little bit of elevated volume with continuous or more so consecutive red bars here. That's a little higher than what is expected during that kind of like lunch period where we typically see really low volume. That's a little bit of bearish bias there on that quick fade, one of the quickest fades to the downside that we got all day. We have this elevated volume. To me, it gets broken up by the green bar. We have an increasing red bar and then a higher red bar, but that gets broken up immediately with a green bar and then fades back down to normal. So to me, it kind of cancels each other out. No bias can be had there. And then this big green bar, guys, again, that's the first candle after the close. It almost never leads to any real movement because all that volume is battle volume going on from funds and institutions who are rebalancing. A lot of buying, a lot of selling, just doing what needs to be done to rebalance their portfolios to make it good for the clients or look good for the clients on a daily basis. So let's move on here now to the 30-minute chart, and we'll take a look at the psychological levels that I need to pay close attention to here tomorrow. I think most other people should as well. We can see here, if you guys remember Friday's video here on Nvidia, we were talking a lot about how Thursday was a beautiful day. We pulled away from both of these, the 50 and the 200, right? The most common, the most eyeballs are on those moving averages on, the 30-minute, but also the 4-hour and the daily. And we pulled away very, very nicely. We gave up that 50, the white line, on Friday, and we were being held by the 200. Now, today was a big test day because this thing was bound to pick a direction. All right. We tested the 50 in pre-market. Volume is very low. Take that with a grain of salt. We ripped higher off the open, and then on the retest, we broke it. There was not a lot of hesitation. We broke back downside. The bears got their retest, right? And the equivalent of this bullish move and retest, for the bulls would have been if the bears broke downside and then just ripped back upside. That would have been the equivalent. However, on the retest here, the bears got their clean rejection on, the truth is, bears, kind of like the lowest volume of the day. I'm really not all that impressed by that hold of the 50 period, you know, they got it, or bears more so you guys got it, but the volume was not tremendous. And I like to see tremendous volume, or at least above average, on the retest and confirmation. You bears, you know, you got the movement, but you didn't really get the volume, okay? So that's something to watch out for. You're getting a little bit of a small sample size agreeing or confirming that move more so. We came in for a test of the 200 period, you know, bounced briefly and then just gave that up. So listen, tomorrow, bulls, we currently find ourselves, we're about 2% away from that 200 period, about 3% away from that 50 period, maybe a little less now after that updated. That this is likely, by the way, this 50 period is likely to come lower and lower into tomorrow. So it's likely to be about a 2 to 2.5% move to reclaim both of those, at least as we, you know, might stand off the open tomorrow. And, you know, bulls, that's really what we're looking for, ideally. This 30-minute, guys, it can change so quickly. Just look from Thursday to today, right? The chart on your far left, all the way to today. Things can change tremendously, but it's pretty clear that there's a lot of eyeballs on these levels because they tend to show some respect, even on a more casual day. Now, bear is really simple for you guys. Obviously, you guys would like to see this 50 period crossing over the 200 period, not because of any kind of magical death cross. It's completely overhyped, but just because that gives you a lower level. Since the 50 period is quicker than the 200 period, it gives you a lower level to look to act as resistance off of, right? Whereas any retest of the 200 period, you bears are going to want to see that reject. Okay, but ideally, this 50 period crosses over, comes lower and lower, and you guys can reject off the lower and descending resistance level. Listen, if you guys have any questions, I know that there are a lot of questions. Leave them in the comments section. There are no dumb questions around here, I promise you. Like, seriously, I get so many people in our private community who they let me know in personal message, like they'll become a platinum member and we'll talk, and they'll let me know that they never actually asked many questions because they felt dumb asking them, and I know that's the case in a lot of YouTube comment sections as well. I promise you there's no dumb questions around here. I don't care if you ask me what green versus red means. No dumb questions. Leave it in the comment section. Let's move on now to the 4 hour. All right, guys, you can see here today that, you know, if you look back to Friday, we had broken the 50 period on the 4 hour to the downside. We looked to reclaim that here today, unable to do so. However, we essentially closed, you know, essentially, it's a little sloppy, but testing the 200 period here on the 4 hour bulls. Two things. I want to see the 200 period act as a support level, and we can get a high volume bounce away from there tomorrow, heading back up toward the 50 period for a test. Because ultimately, the goal is going to be to reclaim the 50 period. Whereas you bears, we're sitting just below the 200 period. You guys want to see a high volume break downside, retest ideally on lower volume, and then boom, hard high volume rejection heading down toward that 850 level, which brings us to the daily chart to talk about that channel, right? This is the most important chart by far because it has the most eyeballs. All right, these charts tend to become, in my opinion, more and more important in the macro sense as we move through the video. Like the 30-minute and then the 4 hour is even a little bit more important, and then the daily is even more important. But the trade-off there, what's interesting there is that on the daily, it's the most important because you tend to get the least amount of tests, right? Like if you're an active trader who happens to be trading Nvidia very actively, you're probably going to end up looking at the 30-minute like more than the daily because you're going to get more opportunities likely on the 30 because it updates faster, the moving averages are quicker, and the levels just tend to get tested more. So, you know, this is a balance here. But here on the daily, this is a big deal. We're right in between still that channel between 850 and 9. We're heading down now toward a test of that 850 region. Bulls, any test of 850, not to the penny, right? But just that range of 850. I want to see, I don't care what volume it tests on, as long as we were to see an above average volume bounce away and maybe look to use 850 as kind of a trampoline back up toward $900 a share. Because ultimately the goal, if you're a bull, you're on the daily chart, is to get back above 9, because, you know, ultimately that leads you back to an all-time high and $1,000 a share. But 9 comes first, and even before that, 850 as a hold comes first. Okay, now bears, we're at 860. You have 10 points to get down to 850. But bears, you guys want to see a high volume break downside through 850 And then again, you want to see that very typical kind of confirmation trio. High volume downside break, low volume retest, and then high volume downside confirmation, backed out away from 850, confirming it as a short-term resistance level. And that would set you guys up for a test likely of that 50-day. However, bears, upon a break of 850, you have another big level within about 20 points or so, at least as of right now. Whereas bulls, if we can hold 850, the next level really is 9, which is 50 points. And if we can break and hold 9, the next big level is 100 points away at $1,000 a share. At least that's where I'm looking. So, bears, you guys are in a little thicker position here, whereas bulls, it's just a matter of, getting some upside momentum and some psychological upside bias. All right, implied volatility here. Guys, we did actually bounce upside today. It's still sitting pretty low in comparison to the last couple of months, but we got a little bit of an upside bounce today. So if you saw, a little bit of maybe Vega value returning into your contracts just a little bit, that doesn't necessarily mean you were green today, right? Because there's still Delta and Theta and all the other Greeks. But if you are running the math and you're like, there's a little bit more money here than there should be, whether you're green or red on the position, here, this is it right here, the IV pump. Okay, but it's still low. It's still quite low compared to the last couple of months. But, the lower that is, the more favorable conditions are for people to come in and buy new contracts, buy while IV is low, looking for a return back upside in terms of implied volatility. All right, now, expected move. Let's do the expected move here on Nvidia. So if we look here, the next expiration we have on Nvidia is April 19th. That's Friday at the closing bell. The expected move by then, being priced in by the market, is plus or minus $36 a share. There's no earnings or anything between now and then. So we can reasonably expect each day to have an equal volatility expectation being priced in by the market. So if we divide that by 4 trading days left, right, Tuesday, Wednesday, Thursday, Friday, we get about $9 a share expected volatility, that the option traders are pricing in. But remember, that is assuming a streak, like green, 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 or 4 reds in a row. So I add 50% to that in this market. That changes, but right now I'm adding 50%. I'm finding that to be kind of the best way to do this kind of little bit of guesswork, honestly. But there's a little bit of that involved. We have to, we can't just assume 4 green days in a row or 4 red days in a row when we're looking at this, trying to pull out the best information we can. So I had about 50%. That gives us a plus or minus expectation of about $13.50 per share. That's the volatility expectation being priced in by the market right now. So if you look at that and you're like, man, I think that's overstated. Well, you can take advantage of that using options, right? You can use that information. It's not just for fun. We're not just doing this to sound cool. And if you think that expectation is understated, you can also look to utilize that to your advantage. All right, and maybe capitalize on realized volatility being more than the current expected volatility. Okay, last thing we can do here. Let's take a look at the directional bias in the options chain. 1.22 about 1.22 million total contracts traded here today on Nvidia. 745,000 of those were calls. 472,000 of those were puts. So we are seeing a call side bias on the overall call put ratio here today. But last thing, right? We can break this down by time frame. The short-term bets, the gambly style calls and puts, the short-term speculators. That's the 0 to 20 delta range. 268,000 calls today. 197,000 puts. So also a bullish bias out of the short-term speculators. Guys, if you're getting value out of these videos, send this to a friend who is interested in Nvidia or who you think should be, maybe. And hey, again, if you're not, please subscribe to the channel. I'll keep delivering the Nvidia videos every single day. I appreciate you guys, and I'll see you in the next one.